Hey, good morning, everybody. Today is Thursday, June 18th, 2015. My name is Cliff Backus, and this is your daily video market review. Stocks shook off midday weakness to close higher yesterday, closing in the middle of their daily trading range. Trading volume was heavier than Tuesday's levels, giving us an accumulation day on all the indexes we follow except the Russell 2000, which actually closed down slightly for the session. Advancing issues edged decliners by an 8-to-7 ratio. The New York Stock Exchange advanced decline line continues to look somewhat less than bullish, taking on the same downward slope that we saw just before the market swooned back in October of last year. New highs bettered new lows by more than 2-to-1 yesterday. The Nasdaq pushed further above its 50-day moving average, while the S&P failed at that level and at trendline resistance. Our market timing model is back to showing an aggressive buy rating on the market, meaning that aggressive traders can be buying here. More conservative traders may want to wait for more clarification from the market. Meanwhile, the O'Neill market model is showing a market in a confirmed uptrend. Small caps continued to better large caps, but by a narrowing margin, and they continue to handily outperform on a 10-day moving average basis. This is in character with a confirmed uptrend when small caps generally are more likely to outperform. It should be noted that at market tops, small caps will generally outperform by a consistently wide margin. The small caps giving ground may actually be longer-term bullish for the market. Our swing timing model is indicating a neutral condition in the market. The market remains conflicted here, showing both bullish and bearish characteristics. That noted, the continued dominance of small caps, along with recent strength in the Russell 2000 and strength in the IBD 50, may indicate that this market's ready to push higher. We're bullish, but we have our stops in place, and we'll watch to see if this market has one more summer rally left in it. What we're looking at here is Moody's list of 177 industry groups sorted in HGSI, high growth stock investors, by 5-day percentage price change. The reason that we look at this is that by noting where the strength in the market is on a daily basis, we can get a better idea of where the power in the market is rotating to. The basic premise of momentum trading, which is what we do here, is that we need to identify where the power in the market is and get out in front of it. So let's see where the strength in the market was today. The top ranked industry group by 5-day price percentage change is Environmental Engineering Consulting, which was up 3.7% over the past 5 days, followed by Educational Services, up 3.5%. Let's drill down on Educational Services a little bit because it's the only industry group that has a stock in our universal watch list, and that's Tarena International Group. We can see Tarena working on the right side of a base here with a buy point of $15.80. Go back to our industry groups. Next group is Toys and Games with a 3.4% gain in the past 5 trading sessions. Specialty Chemicals, 2.9%, and Transaction Management Systems, 2.5%. Let's take a look at the Russell 2000. We've been watching this trend line in the Russell, this short-term uptrend, because it's in such sharp contrast to what's going on with the S&P 500. The Russell 2000 is a small cap index, and it's indicating that small cap stocks are doing better than large caps at this point. Russell right now is trading at 1268. It's bracketed by support at its trend line right here, and resistance up here in the 1279 range. What we want to see is for the Russell to break decisively through this resistance up here before it breaks below this trend line. Let's take a look at the Nasdaq Composite. The Nasdaq yesterday closed up 9.32 points or 0.18%. It closed in the middle of its daily trading range, which is neither bullish or bearish on a short-term basis. NASDAQ is trading at 50.64 right now. It's trading above its 10-day simple moving average, which we show here in green. Its 21-day exponential moving average, which we show in pink, and its 50-day simple moving average, which we show in red. Trading volume yesterday was higher than the prior day, which gives us an accumulation day. For you followers of William O'Neill, the NASDAQ is in a confirmed uptrend. It has been since May 14th. We have 4 distribution days in the past month. And right now, the NASDAQ is bracketed by support down here in the 48.47 area and resistance up here in the 51.20 range. The NASDAQ is currently on an aggressive buy signal, which means that aggressive traders can be buying this market. Conservative traders may want to wait for a little bit more clarification of what this market wants to do over the short to intermediate term. Let's take a look at the S&P 500. The S&P yesterday was up 4.15 points or 0.2%. It's trading right now at 2100 even. The S&P 500 has been struggling with this downward trend line, and you can see that yesterday it blocked the trend line. Also, it's been trading below its 50-day moving average recently. And you can see also yesterday that it blocked at that level as well. The S&P 500 traded heavier volume yesterday than the prior day, giving us an accumulation day. We are in a confirmed uptrend, have been since May 14th. In the past month, we've had 4 distribution days. S&P is bracketed by support down here in the 2040 area and resistance up here in the 2135 range. But of more immediate concern is this trend line. We want to see the S&P 500 break above that trend line. We also want to see it close above its 50-day moving average. We've seen that the S&P has broken down below that 50-day moving average on several occasions in the past 6 months or so, and on each occasion has gone on to set new highs. I have no reason to believe that this occasion won't be the same, that we won't go on to set new highs. But conservative traders may want to wait until we take out this downtrend line before they commit to the market. At this point in the presentation, I generally talk about pocket pivots. Yesterday we didn't see any stocks that had meaningful pocket pivots. And so I wanted to talk about a couple of stocks that aren't really on our buy list, but I do think are worth watching. First one is Tesla Motors. Tesla Motors doesn't qualify for our universal watch list because it only gets a 60% rating on our checklist. However, I like the stock, always have, and it has set up this very nice third stage cup and handle base, very long base that it broke out of yesterday. The pivot point on that handle was $258.75. You can see yesterday it traded above that level on at least 140% of average daily volume. This is not normally a stock that we would talk about by virtue of the fact that it doesn't meet our universal checklist requirements. But it is a stock worth keeping an eye on. Next one I want to take a look at is Mobileye. Mobileye is an Israeli-based developer of software and related technologies for camera-based advanced driver assistance systems. You hear a lot about driverless cars. Mobileye is on the cutting edge of that technology. Mobileye does qualify for our universal watch list. It gets a 72% checklist rating. It broke out of this downtrend back in March and could have been bought on the break above that downtrend. Right now, Mobileye is in a first stage base with a pivot point of $60.28. But last week, it broke out of this cup and handle base at $48.78. Mobileye shouldn't be bought at this point, but I point it out because it is worth keeping an eye on, and if I had a favorite stock in this market, Mobileye would be it. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. For daily access to our model portfolios, trade updates, and more up-to-date information on our trading strategies, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.